Okay, good morning, everyone. Welcome to Market Insider TV. It is a Thursday morning. It's August the 8th. Thanks for joining us as we take a look at our trading day ahead. Overnight trends were firmer. Beans up 4.5 cents, corn 2.5 better, and the wheat was mostly higher. Minneapolis did close a quarter lower, but 1 to 3 cents better in Chicago and Kansas City. Crude oil has had a wild ride on continuation charts that we'll look at this evening in our TV segment. We came down in the overnight to test and actually break through some key support and then bounce off of it and have rallied. Now, despite a big inventory build, we saw crude oil trade over $1 higher overnight. The stock market is higher as well as the bonds are pulling back. U.S. dollar is a little firmer. So a lot of wild gyrations in some of these outside markets. The grains actually have been somewhat quiet as respective until we get into Monday's report. And that's what we would normally see. It's kind of a consolidation, maybe a little short covering coming here in the next several days leading up until Monday morning's key reports. Let's take a look at some information here. Weather models just don't have any threatening heat into the middle of August. I'm in Iowa doing some branch office visits this week. The high today in northwest Iowa is expected to be 76 degrees and not that much humidity. I mean, it's just beautiful, gorgeous conditions outside. But crop growing has really slowed as it's turning drier and some of the lawns turning a little bit brown and things are worse in the eastern belt. So we don't have really any threatening heat into the middle of August, but parts of the eastern belt and Iowa are starting to really dry out. And this is going to hurt the soybean yields. And we could see, I think, a sizable soybean rally. It may not happen here right away, but if we don't have better growing conditions in the month of August, we're not going to have much of a bean crop this year. Weekly export sales were out this morning. Corn came in at only 9.4 million bushels, and I am combining marketing years here. So old and new crop combined at only 9.4. Soybeans, when you combine the marketing years, this isn't very good either. It's 15.4 million, while wheat was okay, 17.9. It's less than what we need to be to reach the USDA forecast, but it is, it's an okay number. Just best way to describe it. Corn and soybeans certainly are disappointing. Ahead of Monday's reports, I'm going to be on the TD Ameritrade Network, and that is going to air Monday morning, 7:15 a.m. Central Time. I'll be discussing the report with them. You can go to tdameritradenetwork.com and watch live. They've got good programming throughout the day talking about some futures markets, a lot of stock market activity, some really good guests, a lot of good information throughout the day. It is available on your computer or iPad, tablets. There's apps for that. It's starting to get a little more popular on Roku and other streaming devices, so you can watch it on TV. But I'll be on that network Monday morning, 7:15, discussing the report that morning. WASDE, as I said, comes out Monday. I think everybody knows, 11 o'clock Central Time. We've got a big write-up in our newsletter this morning discussing what the USDA will be reporting and how they are going to come about this information. So take a time to look at that. It answers a lot of questions about how they are coming up with these acreage numbers. Will they be reporting prevent plant as well as who else will be reporting prevent plant at the same time? So it's a ton of information. I thought I'd give a special look at what is happening and who is reporting it so that you have that information now. Trade estimates, according to Bloomberg, ahead of the report are for reduction from July of about 4 million acres of corn planted at 87.7, and production would be 13.1. Ending stocks dropped from over 2 billion down to 1.570. Certainly, if we get anything less than that ending stocks figure, I think we see another leg higher. That's what it's going to take, is either a big yield drop, big acreage drop, that would give us a big drop in ending stocks. But the market does seem fairly comfortable, a little over $4 mark, with these ending stocks at 1.57. Something less than that, a 1.2, a 1.3, should give us a next leg higher. Soybeans, increase is expected, a very slight increase in planted acres at 80.9 from last month. Yields expected to be down, and that is what I think could be revised further in the September report. And ending stocks do come down a little bit, but they're still burdensome, 810 million. we give estimates for the Bloomberg survey. I'm coming in well less than this ending stocks number. I'm in closer to that 660 area, excuse me, instead of the 810. So I think there is room to be adjusted lower. Finally, in the livestock markets here, we saw a little bounce in the cattle and the hogs yesterday. Bids coming in at 109, asking prices 113, some light 185 trade on a dress basis. The Fed online auction yesterday, they saw some sales being reported, and 3 lots total, and we saw 2 lots selling from Kansas and Nebraska at about steady money. Have a good day, everyone. Good luck and good trading. We'll be here if you have any questions. I will talk to you again soon. This has been Brian Hoops for Midwest Markets.